Perfect. So we are recording now. Let's go to the slide. We'll start with the slide. We'll go to the chart at some point, but let's start with the slide. All right. So first of all, this is the title of today's class: How to Trade Forex Profitably Without Blowing Your Trading Account. Right. So you're going to discover the strategy and mindset behind long-term trading success. You already know my name. I'm Shola Ibrahim, and this is today's date. Right. Just like the topic states clearly here is, many people, I wonder when I see many people blow accounts. Yes, I understand the fact that sometimes you can have a downtime, but you are also going to get a good run, right? So why not survive the downtime, then get a good run? It's just like you're suffering from a flu. Of course, we know there are stuff beyond our control that leads to death, right? But I mean, they say don't eat these, don't do this just to take care of yourself, and you still go back and still keep consuming what is going to kill you faster, right? Kill is a strong language. I think I'm going to censor this since I'm posting it on YouTube, but you get the point. So you don't want to blow your accounts during periods of downtime, because the good runs are going to also set in his life. We are not always going to get things. The things are not always going to go the way we want them to. All right. So when you are struggling in your period of struggle, there's no strategy that don't has its own downtime. Right. So you want to know how to manage those periods and then hit it big when the strategy bounces back from that drawdown. All right. So is there any need to talk about me? I've always been on webinars, so you already know me. I've been trading for over a decade. It's even way more than that, because it started with partially my dad. He wasn't actually a trader. He was, there was, around 2007, 2008. There was this man, I can't forget his name, Mr. Tony. So back then, it takes money from people to trade Forex. That was what I knew. It was Forex at the time. I wasn't that much interested. I'd never even knew what that meant. So then he invested some money. Then there was this return. He promised outrageous amount. It later crashed anyway, but now I could tell why he crashed, because he was promising outrageous returns. Like time, if I remember vividly, at the time he was paying about 50, if not 100% returns per month. Definitely you're going to crash at some point. So when it crashed, they termed it scam, but I don't think so now. Knowing what I know now, it was paying beyond what the market could give at the time. All right. So fast forward 2012, I used to have a friend, Steven. He's more like my in-law, as a matter of fact, because his elder brother got married to my elder sister. He was a trader at the time, and he was good at it. I mean, he was living the life that every young man will wish for. I used to see what he did at the time. It doesn't make sense, but towards 2013, 2014, 2015, then I started the game, and here we are. All right. So, let's go to the next slide. So, okay, before I go to the next slide, why should you even listen to me? I have track record from the students and all of that. So I'm not posting this track record now. I'm just posting the most, you can see the date here and you can see the amount, right? So I also give strategies out for free, right? So which is back testable. You can go test them out yourself and see the wonders they perform, right? So this is one of the students, my boy from South Africa, and this is most recent withdrawal. That was last month anyways. And this is one of the students, this current cohort that ended earlier this week, yeah, the afternoon session anyways. So Chioma by name, she just passed her phase 2 and now she's a funded trader. So I think to an extent I know what I'm saying and the proofs are there. I usually don't post all this money. It can be misleading, right? It can be misleading, so it's pointless. That's why I really don't talk about money on the channel. I used to do that in the beginning, but along the line, I felt like putting it out there doesn't transfer the money into your pocket. So what's the point? So let's just lead with knowledge, right? So now let's start with why most traders blow their accounts. Some of us might be there at this point. I was also here at some point, right? Why do traders blow account? Number one, we all know this lack of risk management, right? Today you are risking 1%, tomorrow you are risking 5%. As a matter of fact, I get these messages almost every day, if not every day, right? I get these messages like, oh, I have this account. How much should I be risking on this account? My goodness, how much is your total capital risk? It's just like you have, I'm in Nigerian, and I'm based in Nigeria, right? So let me use the Nigerian context here. I have 1 million naira in my account. And so now I have 1 million. That's my total, that's it. That's my all in all at that particular point in time. Is it wise if I splash out 900,000 naira out of the whole 1 million I have on something that doesn't really matter, on something risky, something that is a 50-50% chance? It doesn't make sense, right? So I have to calculate, this is what I have, this is what I'm willing to risk on any idea that is in front of me at that particular point in time. And look at it this way. If before you jump into the market, what's your risk like? If you take all of this money and put it on fire, is it going to affect your life? Is it going to affect your account? You want to weigh all of those options so that way you'll be able to come to a conclusion as to what you should be risking per trade. So risk management is very, very important. You don't want to be risking 50% of your account on a single trade. All right. Except you are aware of what you are doing. Like me, I gamble sometimes, but I don't gamble on my main account. Let's say there's a major news event coming up. I could put some money aside on a different account and risk it all. You see that I'm already willing to risk it all. So it's not like I'm doing that on my actual account. All right. That's a recipe for disaster. So before I continue, right, if you have any question, get a pen, get a paper, and put it down. All right. And meanwhile, let me AY. So I'm just going to leave Mr. AY open. So if at any point you are not hearing me, you can't see my screen, just call my attention to that. All right. So yes, let's continue. So lack of risk management, I've talked about that. Then over trading. So some people wants to the truth of the matter is at some point, and many of us may still be at that level right now, you always want to be in a trade. And why is that? It's simply because you don't have a strategy. Because if you have a strategy, you have a game plan, you know exactly what to look out for before pulling the trigger, right? So when you see yourself over trading, it's simply because you don't even have any working strategy. All right. So over trading is a big killer of accounts. You don't have to be in trades every single second of every single minute of every single hour of every single week of every single month. You get the point. All I'm saying is wait for your strategy. I don't care if the strategy, I'm talking to myself now, or this is my own opinion. I don't care if the strategy gives you only 3 entries per week. It's something that you must have back tested or even forward tested. You've seen the profitability and all of that, and now you've adopted as a strategy. You need to wait for it to play out. Sometimes, depending on your style of trading, if you're a swing trader, sometimes for a week or even 2 weeks, you may not even get any entry. But does that mean you should go on tilt? You should derail from the plan? No. So over trading is a big killer of account. I believe we all know this. I'm just going to explain them in my own word. All right. So the next one is greed and emotions. So greed, you're greedy. Your original plan was to take 2 to 1 or 3 to 1, Now you want to hold out for more and you hit your stop loss or probably drop close to your entry and then you're closing for almost nothing. You understand? It's painful. And then emotion, you need to detach emotion. See, I'm still going to say greed and emotion comes in when you don't have a rules-based strategy. Because some people think when we talk about discipline, greed, emotion, blah, 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 it's like an anointing that falls from above and whoop, you are so pumped up and now you've conquered greed and emotion. No, your rules keeps you in check. That's just it. That's how you conquer greed and emotion. Have a rules-based system. Execution, exits, whether stop loss or TP, it doesn't matter. Execution, exits, and stick to it. Simple, rinse and repeat. Do that over and over. Trading is a repetitive game. I mean, in life, we all repeat the same thing almost every day. You have your day job or you have a business that you're running. The same applies in trading. So when you have a good strategy, you are definitely going to conquer greed and emotion. Then another reason why people blow accounts is lack of strategy, no tested and proven strategy. I'm still going to take you to the chart. I'm still going to touch a little bit on the strategy I published a few days ago, right? I'm still going to buttress more on it and show you certain things that you can still do with it. So go back, test it, use that for free and see how it pays you. All right. Then let's go to the next slide. The real cost of trial and error, because that's how many people trade. They trade based on trial and error. Let me just buy this or let me just sell this. You know, I've taught so many mentorships, right? I usually get that question a lot. Like, if I say, hey, I want to see price pull back into certain areas, they'll be like, some people will ask and be like, and what if price doesn't pull back there? You know, right? And that's a honest question, a fantastic question, right? So if it doesn't pull back into your designated area, then you let it go. It's as simple as that. It's as simple as that. It's just like you have a business and then you have a client that used to patronize you. And then on this particular day, probably you offer the service, a poor service, and he or she may have his or her grievances about you. Probably they chose not to communicate it with you. And you're at your place of business and you see them patronizing your neighbor that is doing the same business as you. Are you going to go there and fight that client and force the client to buy? Or definitely not. You are not going to physically go and drag that individual to come and patronize you. The same applies in trading. This is where I want to take action. If price doesn't come there, it's painful when you now eventually see play in your direction because we are humans. That's money leaving you behind, right? But the least you can do for yourself in trading is to be able to pick and choose what you want. Price moves randomly. It's either going up or down. It's always going to move. When you're on the sideline, someone else is trading. When that individual is trading, when that individual is on the sideline, you are trading. That's what trading is all about. So you don't have to be moved because on another Telegram group that you belong to, you see someone trading and this is like Wednesday of that particular week, you've not placed any trade. So because you see that individual trading, you want to force yourself to trade, then you are not ready yet. That's just the plain truth. All right. So I just explained the real cost of trial and error. So we have here. The real cost of trial and error leads to financial losses, of course. What I just explained earlier, these are what it leads to. Mental burnout. You're trying to chase trades, you're trying to pick and choose, you're trying to guess, you're just doing all manner of things. No system, nothing, right? It leads to mental burnout. And then you start calling trading a scam, right? Then it's also when all of this combined comes together, when it comes together, right? It's all time wasted. You should have spent time learning something else, maybe software development or something in tech, right? Now, if you fail to plan, you're planning to fail. Yeah, this sounds cliche, but it's true, right? If you fail to plan, you plan to fail. It's as simple as that. It's as simple as that. All right, let's go to the next slide so that I just want to speed things, then we hit the charts and then we conclude this. All right. So the three steps,
Mr. Peter,
the three steps.
Mr. Ashola, your screen is fixed at
Yes,
number
please.
6. We're in slide 6 next morning. Okay. Now we can see slide 13.
Okay.
Okay.
Okay, it's been stuck on slide 6. Okay, thanks for pointing that out. All right. So the three-step Forex trading strategy, should I say I use? Okay, I can say I use, right? So step 1, identify high probability zones. We all know that, right? You want to identify high probability zones, or the zones that is built around your strategy. Then number 2, confirm with multi-time frame analysis. So you usually need to conduct your analysis around your system before you execute, right? This includes the strategy I published just a few days ago. In that strategy, you also need to plot some zones and wait for price to come there before you pull the trigger and all of those stuffs. Then number 3, you want to enter with risk to reward of, this is my own recommendation now, of 1:2 and above. You know I love 1:2. It's out there. Everyone knows that, right? Someone even commented in the last video that I'm a 1:2 lord. I just laughed about it, but you get the point. The reason for this is because let me tell you something, I've said this a lot, but for those that are probably tuning in for the first time, I will just repeat myself again. Any profitable trade, let's say you put them in one corner, like 100 of them, consistently profitable trader. 70 of them, if you count individual trades, I'm talking about in terms of numbers of trades placed, including winners and losers. Out of the 100 consistently profitable traders, 70 of them, in terms of individual trades, probably have, not even probably, most likely have more losses than the winners. But the risk to reward is what keeps, let me use us in profit. If you place 100 trades, you could lose 60. Doesn't mean that 40 will just smile to the bank. That's the misconception that many traders have, including myself when I was starting out. I thought to be considered a super trader, a consistently profitable trader, is to win most of my trades. Now, there are months, there are periods, there are seasons where, let's take for instance this month, this particular month, super good month. It's almost like I can't lose. Almost like everything I click is a winner. It's almost like I can't lose. You understand? Now, another month could come where out of 10 trades, I could lose 5 and win only 5. Then there are slower months where I could lose 6 and win 4. I'm counting in tens now, 10 trades. You understand? And this month so far, I think, okay, I secured another loss. Yeah, it was one before Thursday. I secured a loss on Thursday. I was buying gold. Using that same strategy I taught, right? I was buying gold, then I took a loss. Price continued lower. So 2 losses now. 2 losses now. The first one you saw on that image I've been sharing, and the one I took on Thursday on gold it was a buy trade. You understand? I even talked about it during the my evening session. with the just concluded cohort, right? But I woke up and it hit stop loss. That was my second loss, right? So but when you go for bigger risk to reward, that's how you cancel out the effects of the losses. All right. Let's take, for instance, it's simple mathematics. I'm going for 1:2 risk to reward, and I'm risking 1% per trade. Let's say after 10 trades, I lose 5 and I win 5. The losers are negative 5%. Remember, I'm risking 1% per trade. The losers is negative 5%. The other 5 winners, because the other 5 winner is 2-1. That's 10%. So deduct the 5% loss. I'm still left with 5% profit. On a 100K account, that's 5K. On a 200K account, that's 10K. On a $1 million account, you know what that means, right? But anyways, let's go on. Now let's break it down on a real chart, shall we? Now I just want to touch on, okay, let me expand this particular screen. Let me slow down a bit in case we are lagging a little bit from your end. So I believe by now we can all see this slide. So profit equals strategy, risk management, mindset. Profit equals strategy, risk management, mindset. So it's not all about the strategy. You can have a super cool strategy, but if you lack that winning mindset, you're still not going to make money. There's this popular saying, give an unprofitable trader a profitable strategy and they're still going to mess it up. Except if you program it into a robot, right? But they are to execute it manually, they're still going to mess it up. Why? Because you don't have the right mindset. Because you've not made that strategy your own. And how do you make a strategy your own? Is by back testing it. Familiarizing yourself with the drawdowns, the good times. See, when I look at any strategy, when I develop any strategy, because by now you could tell that my strategy, I developed them myself. It's completely unique. So and they are all rules-based. Now, when I develop a strategy, I make sure I backtest it. Now, what I meant by making it your own is by getting your feet into the mud yourself. Backtest the strategy. Yes, you learned it from someone, but backtest it yourself. Understand. And when I look at any strategy, the first thing I look out for is how bad I don't even look at the profitability. There's a strategy I'm working on right now. I'm still trying to perfect it. I was supposed to teach it in the previous cohorts, but I started working on it when we started. I even promised them that I was going to teach it during the cohort, but till we finished, I had not perfected it yet. It's a scalping strategy where you can even place up to 8-10 trades per day. So I noticed there's one thing I don't like about the strategy. When I win, the winners you can even make 10% in a day. Yes. There's something because I develop with backtesting. There are a set of rules. When I write them out, then I backtest them. So you can even make 15-20% in a single day. But the losses are not as big as the winners, of course, because even though I'm scalping, I still need to go for 2-1. Get the point, right? But the problem that I still have with the strategy is when you lose, you can make on the very sense, but on a bad day, you could do negative 8%. I still don't like that because it can mess with your psychology. It can mess with your mind. Even myself, it messes with my mind. That's why I've not adopted it. And because I'm looking for a way to adopt it and even code it. You understand? I'm doing this on the 15 minute. Is it 15 or 5 minutes, sorry, 5 minutes time frame. Sorry, I was doing it on the 15 minutes. Sorry, I was doing it on the 5 minutes time frame. I want to up it to the 15. That's why I'm confused there. So I'm doing it on the 5 minutes. I'm trying to see how I can balance it between the 5 and 15. The scalping strategy could place up to 10, 11, 12 trades in a single day. That's why it's called a scalp in the first place, right? But the drawdowns, like when you are down, you're down, like straight, you can go for straight 6 losses. Seen that. So I don't like that about the strategy yet, and that's why I've not even rolled it out yet. So I'm still working on that behind the scenes. But you see, how bad can it be? Are you comfortable with how bad that strategy can be? If it's not going to hurt your returns, then adopt it. Then you cannot, until then, after you understand how bad it can be, then you can now start looking for profits. People look for profit first before even observing how bad can the strategy be. All right. So you don't want to be that kind of trader. So strategy, you want to look for high probability setups, then risk management. In this case, you want to protect your capital, just like what I just explained earlier. I don't look at the profitability first. I look at how bad, because you need to prepare for those bad days. How bad can it be? All right. The risk losses, I'll bounce back and have a good run. All right, I can work with that. Then that's a good strategy, right? Mindset, emotional control, and patience. Now, this mindset thing, no one can explain it enough. You can only conquer emotional trading when you have a rules-based strategy and then you have the discipline to stick to. It's not a miracle from above. No one is going to drill it into you. There's no grammar I can speak to make it make sense and then you adopt it, because we are emotional beings. You can't take that from us. The only way you can, it's just like why some countries looks more developed than the other is because they have better law enforcement than each other, right? So this country, they are good at enforcing the law, and that bias is extremely low. Then there are countries whereby the rule of law is completely low, and there's a lot of bias when it comes to law enforcement. You understand? The rich find it way easier than the poor in some countries, right? So why I pointed that out is, once you have the right mindset, once you have your rules in place, it guides you. The reason why those countries looks better in terms of enforcing the law is because they are more disciplined. So when you are disciplined to stick to the rules, to apply the rules when necessary, bad emotions, of course, goes out the window. So you have to be patient for your rules to play out. You don't need to panic when price does. Yeah, you may feel hot a little bit, but it's your strategy. You've back tested it. You've seen it work fine. So why not just stick to it, right? Why not just stick to it? So that said, let's just quickly revisit that strategy, right? Let's just throw more lights on it, right? So that you see where patience comes in, when to execute, and see the word for patience. First of all, let me start with the loss I had, because they are all important. We are not always going to win all our trades, right? So I'm going to share the screen real soon. Let me share this particular screen. I promise, sorry for not being super fast. I'm usually faster during this. I usually move faster during these sessions, but today I felt like, no, this topic is sensitive enough. It's not just all about the strategy. So I decided that I'll take all the time So the session is recorded. If you must drop off, you can. The recordings is always going to be available, but I think it's important that you get the real-time feedback. All right. I'm glad I still see a lot of us. So let me just talk about the strategy a little bit, then we move on. Let's wait for this to load up. Okay, brought me to Euro USD. Anyway, Euro USD was a good trade. From here, I'll show you that loss. But I'll just wait for it to load up properly so that we can see the zones. Why is it slow? Okay, yeah, this was the trade. So let me just take it to the 4-hour time frame real quick. So on the 4-hour time frame, remember if you watched that video on that strategy I'm talking about, I think it was published 2, 3, 4 days ago, if I'm not mistaken. So there is a support area here as price progressed. It created an area there was a rejection here. Then price came back into that zone around here. After rejecting the zone historically around here in the middle. So when price was approaching there, again, that was on Friday. Remember, the rule of that strategy states that when you have an area of support or resistance, you want to go to the 15 minutes time frame to wait for change in market structure, right? So as price was approaching it, I went to the 15 minutes time frame. I don't know if you can spot the change of market structure. Can you spot the change? When price was dropping into that zone, it was creating lower low, then went on to create a new higher high. That was the moment the trend changed. You understand? Then, remember I also talked about something called the first buy area and the second buy area, right? So can you see how price pulled back into the first buy area? If you missed that video, this first buy area and second buy area was the first thing I talked about. So just go back and watch the first 5-10 minutes of the last video I published on the 15-minute strategy, right? So you can see price pull back into that zone, got in, stop loss below, and I went for my favorite. Sorry, I was just checking how far it went. Sorry, it was actually a 2-to-1 trade, not 4-to-1. You know I love 2-to-1, so it was around here. I took profit somewhere around here. So for those that love higher risk to reward, that's for you. All right. So let me show you the one I lost. It's not all about the winners. Remember, I said I took 2 losses so far this month using this particular strategy. Anyways, I've taken other losses on other strategies too, 1 or 2 on the other accounts. But on this one, yes, I can see the loss here. This was the loss. Let me confirm I'm still sharing my screen. Yes, I am. So this was the loss. So why did I take it? If I go to the 4-hour time frame, if I go to the 4-hour time frame, price came to my target. If you watched last week's analysis, I had my target on gold was up. So after price came into that zone, it fell off. So when it was approaching this support area here, around here, let me stall a bit around here, where you see my mouse, around here. So if you go to the 15 minutes time frame, I now saw the same, the strategy remains the same. True losses and winners, it remains the same. All right. So when price drops was dropping into that zone, it was creating lows, lower high, lower low, lower high, lower low, stuff like that, lower high. We are waiting for a change in trend the moment price came into the zone, right? Lower low, lower high, lower low, and then boom, price took off and created the first new higher high from that zone. So which means it broke above here. So I'm waiting for buy area, right? This will be my first buy area right here. So price came into that area, as you can see. And then I went in, and unfortunately, price stopped me out. All right, what can I do about it? You cannot predict the single trade on a trade by trade basis. No one can. On the mentorship, our mentorship program, I usually say this. When I get into any trade, I usually assume the worst. So that way my mind is prepared for the worst. We don't move stop losses. Our stop losses should be where it should be. You cut losses short and keep winners bigger than the losses. That's the secret to success. There's no rocket science there. So it's not, that's why I laugh when I see people say, I'm the godfather of trading. I'm this, I'm that. Oh my goodness. So much noise in the Forex space, but it is what it is for stuff, Sam. They are giving them what they want at the end of the day. But no one is the godfather of trade. You cannot guarantee for a fact 100% the outcome of a single trade. Yes, with a good strategy, you can predict the outcome of a certain number of trades, but one trade you don't know. All right, so just get in, do what is humanly possible within your strategy to get in, and the outcome is in the Lord's, is in the hands of. You get the point. I just refresh our memory. This strategy, right? It also, remember I said my target for during my last weekly analysis, the last one, the next one is dropping tomorrow. The last one, which was last Sunday, around here was my target, right? So when price came into that target, can you see when the change of market structure happened? If you can't spot it, let me just show you. From the bottom, price was creating higher highs, higher lows, higher highs, higher lows, higher high, higher low, lower high, higher low, right? Equal high, equal low, something like a higher high. Then we had a fresh lower low. This is the first time we had a new lower low from the top to the downside. Then what do we want to expect? Our first sell area is here. Our second sell area is up here. Simple and straightforward. If you just go back to the last video I sent once again, watch the first 10 minutes, second buy area. So I love 2 to 1. So 2 to 1, you can see from the entry, 2 to 1 hits targets. Then price continued again. It is still trading at around that resistance. You still want to sell. You can't just say, oh, since I took one trade, that's all, right? Then price created something like a higher high here, higher low, higher high, equal low, lower high, new lower low. There's a new change in market structure again from our major level of resistance above. So you wait for, I actually even sent this out. Yeah, I sent out this chart on the mentorship groups. I sent it out. So I didn't take this next trade, but I sent out the charts and something distracted me. I could send these screenshots after. tonight. Actually sent it out. I sent out the screenshots, and then price may be behind. I came in late. Price was already in super profit at the time. But you see how the strategy works. So true losses, winners. Just make sure your winners are bigger than your losers. It doesn't matter if after 10 trades you lose 5 and win 5. Then you think you're a bad trader. Ignore these hypes on turning $10 to 1 billion. They are all lies. All right. They won't show you how many times they had to fail, right? Because we all know these tricks. Then at the end of the day, we ask you, just like me, to pay for my mentorship, right? So you have to keep it honest at least, right? And then, anyways, let me just leave all of that. I don't like talking about other people, right? So that is that. Right? Go back to the slide. Ask question. I've been the one. I see a hand. There's no names up. If you have any question, by the way, if any question, just indicate by raising your hand. There's the raise your hand icon. Click on that, then you'll be allowed to speak. All right. I see the thumbs up guy or lady hand is raised, so you've been allowed to speak. There's no name, so I can't call you. Okay, I think that was a mistake. So if you have any questions so far, please indicate by raising your hand. If you have any question, which means I'm doing a good job. All right. Let's go back to the slide and conclude this class. Let's come back here. Share screen. Perfect. So let's talk about the 6 golden rules of account protection. Number 1, risk max 1 to 2% per trade. Now, this is not totally correct, but in the beginning, right? If in the beginning, it is important that you start small. So max should be 1:2. That's if you've not started making money from the market. All right. But with experience, with absolute trust in your strategy that has paid you over time, you can up that risk. Because personally, on my personal accounts outside of Profen, I risk anywhere between 3 to 5%. I mean, most of you that have been following me for the long time know this by now, right? So, but in the beginning, when you're still struggling, please, it's recommended. Even I also believe that you shouldn't risk more than even 1% per trade. All right. And always use stop loss, please. Please always use stop loss. Always use stop loss. I see people, they don't use, I don't know. You have to use stop loss, because stop loss is not the end of the world. You know, it's all about ego. We have ego. We don't want to be wrong. We don't want to be wrong. Being wrong can feel humiliating to some of us sometimes, but you have to be honest with yourself. You're wrong about the trade. Just take your loss. That's the idea of keeping your losses smaller and allowing your winners run to your TP. So if you can wait for price to go straight to your stop loss and hit your stop loss, then you should also be patient enough for price to get to your TP. It's as simple as that. All right. Let's look at the next. Never
Mr. Salah, someone has a
revenge trade. Okay, there's a hand raised. Okay. Please go ahead and ask your question. I think it's Mosh. Please go ahead, please. You can unmute. To be able to speak, you need to unmute and speak.
Good evening, sir.
Okay. Good evening, sir. Kindly tell us your name and where you are joining us from. Then your question, sir.
Okay, my name is Tash. I'm from South Africa.
All right, nice to meet you, Tosh.
Thank you.
Go ahead,
I
please.
just want to go back a little bit, maybe from the examples that you were showing us. My question based on that is, do we have to wait for a certain confirmation before entering, or we just enter at the retest? Because I've been using the same strategy, but I think I find it a little bit difficult because most of the times it doesn't necessarily give you any confirmation. It just goes either up or down to your favor after the retest. So my question is, do you necessarily have to wait for a certain confirmation or not? Thank you.
You're welcome. All right, that was a good question. So first off, I would like to clarify that I had to, when a video is too long, people don't really like it. So I tried to keep it as short as possible, detailed to the point. So I didn't give details on entries because there are different ways you can enter, you know, so many ways you can get in. But let me just put this out there, since you said you're finding it a little bit difficult to follow up with the strategies. So I would recommend just start with an engulfing candle. Just keep it at that. Keep it simple. Keep it at that. All right. Because time will not permit me to talk about the different ways that you can look for confirmations, because there are different things that can still come together, and then you can now narrow down properly which of those traits to go with and which one to discard. You understand? But if I go deep down into that, it's not just going to take one class. There are different ways to go about this. But just to make it make sense, I would say start with an engulfing candles myself. So start with an engulfing candle. When price pulls back into these areas, switch to the when you switch to the 15 minutes time frame and you're waiting for those pullbacks, then when it comes into your zone, use an engulfing candle. Now that's going to limit the number of trades you get to place, but at least you have a defined entry. So let's start with the engulfing candle so that way you can narrow things down. So I hope that makes sense, Mr. Tash.
Yeah, it makes a perfect sense. Thank you.
You're welcome. All right, so let's go on. So never revenge trade. Of course, we're all guilty of this. I used to be guilty of this myself. I won't even lie. To be honest with you, sometimes maybe in a year, if I want to quantify how many times I do it, it can't be up to 5. You understand? Because there's no way you can completely kill it. Let's not be hypocritical here. But so back in the day, especially when we're starting out, we're doing this thing like clockwork. You understand? So it's actually a recipe for disaster. It's not a good way to trade. When you come to the market, you've mapped out everything, and price starts. When you came in a little bit late, and price had moved and left you behind. You already know where you should have gotten in. What I'll do is I'd rather just place a limit order and hope that price comes back to tap me in before hitting the target. Someone asked on the mentorship program last week that what if, okay, the question is deeper. Time will not, I don't want to go into the question, but my answer was this, right? So when I want to get into a trade and price moves, say I came late, right? Then price had already moved away from where I would have loved to get in. What I'll do is I'll set a pending order. But if price had moved and hit my TP, I won't set that pending order. I'll just let it go. But if price has not hit TP, I'll still place the pending order and then hope that price pulls back, tap me in before making its way to my TP. But TP, I won't place the pending order anymore. That's just me. You understand? So why did I say that? Don't chase trades. Don't chase trades. If you came in late, let it go. If price doesn't come into your zone, let it go. It's as simple as that. The most important thing you want to conquer in trading is the guesswork. All right. Then the next is avoid over leveraging. All right. We don't need to spend much time here. Many brokers offer outrageous leverages and all of that. And the higher your leverage, the more trades you can place. Right. And of course, if those trades are bad trades, the more losses you incur. But if a lower leverage means you cannot, okay, why is it like that? Let me just explain a little bit. The higher the leverage, the lower your margin. Margin is the down payments, the deposits, the collateral you pay when getting into a trade. You will see it if you're trading on a laptop or a computer, you see it down. You will see that there's a margin requirement for that trade. So if you are using a high leverage of 1:500, 1,000, 1:2,000, you will notice that you have a lower margin. So which means you have enough money to place more trades. But when you're using a lower leverage, you can't place too many trades because your margin requirements are higher. It's usually huge. You understand? Time will not permit me. That's a different topic anyway. So don't over leverage. So beginners always want to choose the higher leverage so that they can place multiple trades, forgetting that you're not even profitable yet. So if those trades are all losses, easy way to blow your account. So simple as that, right? So in the beginning, it's advisable to maybe anywhere. I know 1:30 may be too low for your capital, but at least anything from 1:200, 300, max 500. You could use 1,000. When you know how to trade, when you have a good system, when you're disciplined, when you have proper risk management in place, it doesn't matter if you're using 1:1 billion. It doesn't even matter, all right? Because you know what you're risking per trade and all of that. So it's only beginners, to me, those people that are here to find consistency, that leverage really, really affects. All right. So don't over leverage when you're not a consistently profitable trader yet. All right. Then do a weekly recap. All right. Do a weekly recap. This is in the beginning. There's a point you get to, you don't even need a weekly recap anymore. My own recap is usually 10. After 10 trades, what's my performance? Did I win more? Did I lose more? After 10 trades, if I'm not profitable, that means I'm in a strong losing streak at that particular point in time. That's where I quantify it, right? So I usually quantify with 10. Yours may be weekly. It all depends. Then take profit without greed. All right. Before you get into a trade, you know where your stop loss should be and where your TP should be. All right. Then how do you develop a winning mentality? Right. Winning is 80% psychological. And that's the truth. I believe that. Why is it psychological? It's simple. You set realistic targets. You are not the type of trader that wants to turn $10 to $1 million, and you are delusional enough to think you can do that consistently over 10 years. It's not possible. You just end up being a one-hit wonder. Is it impossible? Definitely not. But is that a consistent way to trade profitably over time? Definitely not too. You understand? So if you want to treat this as a business, if you want to take on investors and increase your capital base, then that's not the mindset to have. So set realistic goals for yourself. I'm looking for a strategy that will give me 5, 10, 15, 20% per month. And I'm willing to accept whatever that strategy gives me. I must not force it to give me that 20% every month. If it gives me 2%, I did better than 95% of traders that fail. If it gives me 15%, fine and good, I did better. If it gives me 50%, even better, right? but you are not forcing the market to give you exactly what you want of consistent income per month. Go get a day job. It's as simple as that, right? So detach from now. Let's go through the list. Detach from outcome. Yes, I said this earlier, right? When I get into any trade, I assume the worst. Of course, deep down I want to win, but I assume the worst. I'm already prepared that if it hits stop loss, I'll accept it. I won't move my stop loss. So detach from the outcome. If it gets to your TP, don't be overly excited. I mean, that's just one trade. Let's count the next 1,000 trades, right? Then you want to stay patient, which means wait for price to come to your zone. Price will not always come to your zone. Price moves randomly. It's either going up or coming down, right? But what you've chosen to act upon in the market, you need to be patient for price to offer you that. Of course, price progresses at some point. You cannot just plot its zone and expect that if it doesn't come there today, it should come there next month. No, price will eventually progress. You will have new zones. But the point is, you want to see price come to those zones before you take action. Stay patient. And the next slide, discipline over excitement. Be disciplined. You win one trade and you are like, you're feeling like you're on top of the world, right? The market will shock you. You understand? The market will shock. I don't want to use the vulgar word, right? Since I'm posting this on YouTube, but the market will shock you. So discipline over excitement. It's a loss is the same cost of doing business. It's a win, even better, but keep your cool because you don't know the outcome of the next trade. The only time you feel excited is when you withdraw. All right. Just like the withdrawals I showed earlier. Then journal every trade. In the beginning, personally, that's the way I see it, right? In the beginning, or when you're developing a new strategy, or when you are just applying a new strategy, you need to journal for a long period of time, at least 6 months. You understand? But over time, there's this point you get to, I don't really need journal. Like personally, I don't really journal. I only journal when I am testing out a new strategy. When I am adopting a new strategy, that's when I journal. Because that's where I get data to improve on, to now tweak that strategy going forward. But once I get that after 1 year, I don't really journal no more. But in the beginning, it is very, very important. Now let's quickly go over the top mistakes that will kill your account. Trying to trade every day. Now you give trades every day. Now that's not bad. It's not like it's a bad thing. As long as it's rules based, it's not a bad thing. But what if that strategy doesn't give you an entry in a single day? Do you have to force the trade? If it doesn't happen in 2 days, then you wait. This happens mostly with even swing traders. Sometimes, like I said earlier during tonight's class, for a whole week, there may be no trade. There may be no trade, right? When you are day trading and scalping, you get to get trades quite often than swing traders, right? But you just have to let it go. Wait for price to give you what exactly you're looking for. Quality over quantity. Now, risking too much. I said this earlier too. You have a 10K account, but you are using 5 standard lots with a tight stop loss. You understand? When you don't want to be risking too much. The ideal, I said this earlier, especially when you are here to find consistency in your trading, 1 or 2% max is great. But when you're like personally, right, when I trade on personal accounts, I risk around 3 to 5% because I have absolute trust in the strategies I use, right? So the next slide, copying others blindly. Now, this is for signal copiers, right? So it's better when you're getting a signal, you understand the strategy behind the signal. You're not just copying signals blindly. That's why many people hop from signals to signals. So you want to make sure that even though you're copying the signal, make sure you know the strategy behind the signal. Make sure that when you go to the chart, you can interpret why that individual called it. So even if it's a loss, you know what happened. If it's a winner, you know what happened, not just what that individual is telling you. Then number 4, ignoring news. Even though I don't trade with news personally, at least your routine every day should be, what is the major news event? Okay, let's take, for instance, someone trading prop firms. Some prop firms will tell you, hey, we don't accept news trading. So you need to know what time that news is coming out to know when not to trade on that account so that you don't run into problems, right? And again, secondly, even if you're trading on your personal account, personally, I say this most of the time, that news is for swing traders, not someone that is scalping. You're scalping, you're going for your stop loss is just 3 pips, your TP is 6 pips, and you're saying you're trading with the news. You don't need the news. Whether there's news or not, price will always move faster into your stop loss or your target. You understand? But it is still important to look at it so that if you're someone that wants to stay on the sidelines during the news, then you know what to do. So keep an eye on the news. But if you're someone that reads the news and you know how to apply it, then you know what to do. Very important. Then no consistency in strategy. Today you're trading this strategy that you learned from Mr. A or Mrs. A, and then the next day you're learning another one from there and from here and from there and from confusion everywhere. You know what that leads to, right? So what's the routine of a profitable trader? Now, aside I wake up in the morning, I brush my teeth and pray, all those kind of stuff that we see on YouTube and all of that, even though there's a camera above us, when we stretch like this and stuff, I mean, you woke up with a camera, you knew you are preparing for that, you wore a clean singlet and all of that. Anyways, that's a joke, right? So aside all of that, let's push all of that aside. Let's bring it to trading. So the routine of a profitable trader is, before getting into a trade, you already know what time frames you're looking at and what time frames you're executing on, right? And then you want to check the news. We've talked about that already. Then what's your method of analysis? Of course, it has to be centered up around your rules, the rules of the strategy you're trading, right? Then you should, oh my goodness, I can't emphasize this enough. Entry check lists. Entry check lists. Rule A has been met. Rule B has been met. Now we're waiting for C to pull the trigger. Once C aligns, boom, you are in. Win or lose, win or loss, you are in. It doesn't matter. Entry checklist. I don't joke with this. Before I place the trade, I think out loud. I'll be like just like when a pilot and the co-pilot in the cockpit are trying to take off, right? They go over the safety checklist and whatever checklist they need to look at, right? So before executing a trade, I'd be like, so that I'm sure that I stuck to the rules. This check, this check, this check, boom, I get in. Win or it's a loss, I don't care at that point. I did everything humanly possible within my strategy, right? So to the next slide, review and journaling. This is, once again, personally, the way I use this is when I'm developing a new strategy, I review my journal and develop where necessary. All right. Add or deduct and all of that, right? So we're coming to the end of the program. So of course, if you want help becoming a consistently profitable trader, if you want to know more about all the concepts I've talked about and even more, because all what you get in the mentorship, right? You want to join the Let's Trade 10x. Just go to letstrade10x.com and sign up. Our next mentorship is coming up on the 4th of next month. So you want to look out for that. All right, 4th of next month, and get my full strategic templates and all of that. All right, so limited slots. So now let's take questions. I noticed some hands. Let me see, some hands are raised. I see the CEO, I see Mr. Okay, let me start with the top. All right, the CEO, please go ahead, unmute yourself. Okay, the CEO disappeared. All right, let's take Mr. Ima. So can you tell us that's the correct name? And okay, Mr. Ima also muted himself. Then we are left with Owen. Mr. Owen. So to ask your question, you need to unmute yourself to be able to ask your question. You will see the little microphone icon with a slash. You want to click on that so that that slash disappears.
Hello,
to
sir.
be able to speak.
Hello. Hello. Hello.
Okay,
Can you
I
hear
think
me,
Mr. Ima, you are unmuted, but I
sir?
can't hear you. Just in
Hello.
case you're speaking, I can't hear you.
Can you hear me? Hello.
All right. So
Can you
while
hear me, please?
some of us are struggling to speak, I can't see. Okay, I see
Hello.
Becking Boiler. You've been allowed to speak, Ben. I don't know. Yes, it's disappeared. All right. So while we are struggling to connect with each other, this
Hello.
video is going to be uploaded tomorrow evening. So, all right,
Hello.
see Robert's hand is raised.
Hello.
Okay, go ahead, Robert. Good evening, Robert. Kindly tell us where you're tuning in from and your name, then your question.
Hello.
Yes,
Hello.
I can hear you. Can you hear me?
Yeah, I can hear you.
All right, Becking, Mr. Ben.
Yes.
Okay, let's take Mr. Imatosh. Please, where are you tuning in from? Then your question, sir.
Okay. Yeah, can you hear me, sir?
Yes, I can hear you.
Hello. Can you? Okay.
I
Good
can
evening,
hear
sir.
you. Yes,
Okay.
I
Yes.
can
This
hear you.
is
Good evening, sir.
okay. Imatush, tuning in from Warri, Delta State.
Okay. Okay, nice to meet you.
It's my
Please go
pleasure,
ahead
sir.
with your question.
Okay, please. I would like to ask what your recommendations are for trading a prop firm account. What approach do you think one should take, especially as it has to do with not having any time limit? I don't know if my
Okay.
question is clear.
So I'm still trying. No, it's not clear. I would appreciate if you can clarify so that I'll know what you're talking about.
Okay, then when prop firms have time limit, there was this rush to want to finish up, and people trade under pressure. Now, considering that prop
Yeah.
firms are removing their profit target limits, some of us still find ourselves trading under pressure, as it were. Like we want to hit the target,
Okay.
even though there is no limit placed by the prop firm. As such, some of us end up
Mm-hmm.
losing these accounts. So, what approach do you think one should take to keep one in the game, as in trade pass and also maintain the account?
Good question. So what's
I
going
don't
to
know if it's
happen is
clear
this
now.
question will be deferred to next. Yeah, it's clear, sir. So this question is going to be deferred to next week because we're going to be talking about certain things around prop firm, something I've not talked about before. So I think this question is better suited for next week. So can you just put it down somewhere? Hopefully you tune in next week so that I'll answer this next week if that's fine. But
Okay,
just to
that's very
provide
fine.
a brief answer to what you just talked about. So it's simple. I would have loved to go into more details and give different scenarios, but just so that I leave you with nothing, let me just touch on it just a little bit, even if it's for 30 seconds. So the reason why you're under pressure is because I won't assume you don't have a good strategy. So let's assume you have a good one, right? The reason you're under pressure is because you're looking at something else. You're looking for something else. So you to focus on your execution. All right. Just focus on the execution for the time being, because trust me, withdrawals boost confidence. Yes, withdrawal boosts confidence. Now, when you're rushing, giving yourself that mental time limit, you start seeing things on the charts that are not even there, or because you want to see them, then they just pop up and you think that's the one. So it's better, instead of focusing on the time limits, giving yourself that mental time frame to complete that account, it's better to just ignore that and focus on execution. Each time your strategy pops up, then just focus on execution, no matter how long it takes, no matter how long. I did a mathematical, well, I'll do this next week again. So I did a calculation with the participants of the just concluded mentorship. Just simple calculation. Just imagine that it takes you 4 months to pass an account and make your first withdrawal. Just imagine what you will achieve, even with that, even starting from a low account. Just do that math. It's a business that you want to build. You are not putting all your bills on just one account. So you get one account. Of course, you should have the strategy to be able to trade it profitably. You have that one account. The proceeds from that one account, you reinvest into a bigger account. That's how you build your business, right? Trading is also a business. That's how you build your account. And then when you start making bigger funds, you now start building your personal account instead of prop firms. But I'll touch on this next week also. But for now, just focus on your strategy instead of when you want to complete. It's just like you're driving you said you're in Asaba, right? And I'm currently
Worry, worry.
let's meet in Abuja. Okay, sorry, Warri. Yes, so you are currently in Warri. If I say, okay, come to Abuja, let's meet at Abuja tomorrow, and then you hit the road with your car, you're driving. You have to go through the process. It's not a flying car. Even if it's a flying car, you can't, except if it's a teleporting car whereby you just disappear and just appear here. You still need to go through the route. You still need to go through the process. So the problem many traders have is they just want to buy the accounts and just pass the next day. That doesn't mean we are better traders than those that took 2 weeks, 3 weeks to pass. You get the point. So you need to go through the process. And what's the process? Your execution process. Because that's what is going to take you from this part to this part. Except if you want to gamble. Now that's a different ball game entirely. You understand? So for now, just instead of when you would like to pass that account.
Yeah.
So I hope that makes sense.
Thank you very much. Yeah, yeah,
All right. You're
yeah.
welcome, sir.
Thank you.
So I noticed, Ben, you're welcome. So I noticed Ben is unmuted. So Ben King Boiler, I noticed your mic is open, but I can't hear you.
Yeah,
Who is speaking now? Is that Mr. Owen?
yes, please.
Okay, go ahead, Mr. Owen.
Yeah, I'm Owen from
All
Ghana.
right, sir.
Yes. So, good evening.
Okay, nice to meet you,
Nice to meet
Owen.
you.
Good
So,
evening,
my
Mr.
question
Owen.
is regarding stop losses and all. I'm like, sometimes you want
Okay.
to trade like let's say you're trading Euro USD, but then you want to make multiple setups on like. My question is regarding the your risk ratio. Should all three sum up to your risk ratio, or should each of them one by one sum up to your risk ratio? I don't know if my question is clear, please.
Okay, come again. I'm trying to understand.
Yes.
Please,
So
just come again with the
sometimes,
question, please.
yeah, sorry. Sometimes trading, you would like to trade multiple times on one setup. Let's say you're trading EURUSD, but then you'd want to trade like set 3 trades on that same setup. So should all 3 setups sum up to your risk ratio? That is, let's say if you are raising 2%, should all 3 trades sum up to the the
Okay.
2%, or should each of them sum up to 2%, 2%, 2%? I hope my question is clear.
Okay, on the same pair.
Yes, please.
Okay. All right. Even if it's a different pair, even if they are all different asset classes, I would recommend that you have a defined risk. That's what I recommend, right? So have a defined risk. This is
Okay.
tricky. So let me break it down. This is how I'm going to look at it. So have a defined risk, right? I want to risk 2% on a trade idea. So if you are going into that particular trade, that particular pair, you're placing multiple trades, like 3 trades, you can't make them 2%, 2%, 2%, because that will mean on one trade idea, you're risking 6%. You understand? Except if, so let's say some of those trades are buy trades and some are sell. So one will cancel the other out. That's different. But if the first trade idea you're buying, the second one you're buying, the third one you're buying, you're risking 2%, 2%, 2% is dangerous. That means you are too exposed. So even if you want to go in with 3 positions, still risk the original, take the original risk, which is 2%. That's what I would recommend. That's what I would do. Or let's
All
take,
right.
for instance, I am buying on Euro USD. Then I'm getting a sell signal on GBP USD. All right, I could still risk 2%, 2%, or 3%, 3%. Let's take, for instance, 3%, 3%. So what I mean, Euro USD, if Euro USD is actually going to go for a buy, then GBP USD will most likely also go for a buy. Not all of the time, but most of the time it will also go for a buy, right? Time will not permit me. I even explained something like this 2 days ago on the mentorship. But anyways, if you're selling on Euro USD and you're buying on GBP JPY, all right, you can still take your original risk on the 2 trade ideas, because most likely one of them will hit TP. You understand? But if it is on one asset class, then you're exposing yourself too much trading that way. So I hope that makes sense.
Yes, please. Yes, please. Thank you.
You're welcome. All right, so that's should I take one more question? All right, let me just take one more and then we call it a night. I noticed Mr. Robert unmuted and Banking Boiler is also unmuted.
Yes, please. Can I
You
speak?
can go ahead and ask your question, please.
Okay. Ina,
All right.
thank you so much for the teaching. I really learned a lot. But my question is, even though you've given us these teachings, do you still have trade ideas for the week going forward?
Sorry, who is speaking, please? You didn't tell us your name and
King
where you're
Boilers.
tuning in from.
I'm calling from Uyo.
Okay,
Yes.
from
I'm calling
Uyo. All right.
Yes.
Nice to meet you. Yes.
Yes.
Okay.
Thank you.
So come again with your question. So you're saying, yeah, of course, after tonight's teaching, the normal weekly video is going to drop tomorrow.
Okay. Thank you.
Yes.
Thank you for what you really
You're
did.
welcome, sir. I appreciate. All right. So that's how far I can go. I need to retire for the night. All right. I still see some hands raised, but you're going to forgive me. You can put down your question and send me a DM. If it's something I need to address to you personally, I'll do that. If I need to wait for the next webinar, I'll also do that. All right. So thanks for tuning in. And once again, the recording of tonight's class will be available tomorrow night. Yep. And yeah, I think that will be all for tonight. Thanks for tuning in, and I'll see you in the next webinar. Good night, everyone. Bye.